Okay, merci beaucoup, mesdames et messieurs. Thank you for coming back so quickly after the break. We delayed slightly because we had a press conference, but I think we are ready to go with our first plenary discussion. And we've got an interesting panel that has been put together with people from different walks of life. And our topic of discussion today is taxation of intangibles, digitalized economy, finance, and technology, developing a common policy position to support domestic resource mobilization in Africa. So, ladies and gentlemen, the process is going to be quite smooth. We're going to have 4 panelists. We'll give them a chance to do their opening remarks, after which we are probably going to also enable you to ask a couple of questions. We're also going to open up the discussion to the digital space. So if you've got a couple of friends, a couple of associates who are not in the room, we'll also be able to engage with them. And then at the end, we'll have closing remarks from each of the panelists. So it's with great pleasure, ladies and gentlemen, I'd like you to put your hands together for the Executive Secretary of ATAF. Let's welcome once again to the stage, Mr. Logan Warts. Ladies and gentlemen, please welcome with me a special person, and I'd like you to give her a huge round of applause, because if you do, I might get a tax exemption for my company in Uganda. She is the Commissioner General of the Uganda Revenue Authority, Doris Akol. Ladies and gentlemen, representing UNECA, please welcome somebody who's got a background in economic affairs. She's passionate about reading, dancing, and public finance, taxation, and culture. Uzuma Irume. Big round of applause as she comes up. And ladies and gentlemen, please welcome with me our final individual, Memory Kachwamba, Executive Director of Femnet. She's passionate about women's rights. She's an activist, and she's here today on the panel. Give her a big round of applause. All right, so I think what we're going to do is that we're going to give approximately 5 to 7 minutes to each of the panelists to introduce themselves, and then again also to give us opening remarks. So each of you has a microphone on the podium. And I think I'll kick it off with Uzuma. So welcome to Kenya.
Thank you very much.
So you represent UNECA, and you know the position and the perspective that probably I'd like you to bring is, you know, the fact is that, you know, all African governments are part of your organization. So we would like to see what's the perspective of Africa versus the world pertaining to this particular digital discussion. So I think let's take it away from there. I'll give you 5 to 8 minutes. You can give your opening remarks, and then we'll throw in a couple of questions along the way.
Thank you. So my name is Uzuma Irume. I work with the Economic Governance and Public Finance section, the Macroeconomic and Governance Division. So thank you very much for having me on this panel. I just want to say that for us at UNECA, digital economy is something that is gaining increasing attention. And I think we're very much interested. Sorry. Can you hear me now? Yes. Okay. As I was saying, the digital economy is something that is garnering increasing attention across the world, and particularly for Africa, we are interested to ensure that African countries can develop fiscal policies to ensure that they are maximizing their potential. Now, for us, we've been working on domestic resource mobilization. I'll start again. Is this better? Yeah. So at UNECA, we are strong advocates for developing fiscal policies that are responsive and measured to ensure that domestic resource mobilization across the region. We're very much in support of trying to find ways in which the pervasive tax evasion, base erosion and profit shifting that occurs on the continent, and now increasingly digital economy, and making sure that countries are able to capitalize on the potential of trade within digital economy, and also to ensure that we can leverage digitalization to improve tax administrations. Now, just in terms of a background, we've been working on structural industrialization, economic transformation for the last decade. We've really been focused on this area. And what we're finding increasingly is that as we're pursuing economic growth policies, we're not really seeing a return in the fiscal policy space. The tax to GDP revenues are not reflecting the economic growth that's being achieved on the continent. So this has led us to ask some serious questions. Where is the money going? Why is it that as we're achieving economic growth in some of the countries where we're seeing growth in the double digits, we're not really seeing an aligned response in the tax to GDP revenue figures? And so as we're delving deeper, we're finding that a taxation of multinational corporations is an issue. The taxation among taxpayers is an issue. Small and medium enterprises are finding it difficult to also contribute to the tax base for several reasons. It could be because the tax administrations are not sufficiently user-friendly. We have an issue of an informal economy where we know that up to 80% of populations are involved in some way or another. And now we have the introduction of digital economy, where we're seeing that there are digital companies who are benefiting from trade within the continent but are not paying their fair share of taxes. So now the question is, how do we address this? And we understand that we don't know yet enough about the trends and development in this sector. We know that Uber operates on the continent. We know that many people, amongst us, also ourselves, use companies such as Amazon, Google, Facebook, but trying to actually capture our fair share of the tax revenues that are generated through these activities is something that is still proving increasingly difficult. The digital trade within Africa is growing at about 40% annually, and it's predicted that this will continue to grow at this rate. So the question is, what do we need to do to really ensure that we can optimize this type of activity on the continent, and we can then channel those funds into achieving our development objectives? There's another thing I do want to say about the improving tax administrations on the continent. There's a lot of talk about digitalization, and what we found is that this idea of big data, this idea of using technology to get a firm understanding of your economy, of your taxation trends, is something that hasn't been fully embraced on the continent yet. I have visited some countries where they're still using sort of quasi-analog approaches to collect custom revenues. They're not analyzing data at the level that we would like to see. They don't really have a strong understanding of where some of the tax revenues are leaking. And I think this is an area that we can really try to tighten up to see, can we do more to improve domestic resource mobilization. So this conference is a welcome platform for us. As I mentioned during the press conference, the Interagency Task Force on Financing for Development is in the process of producing the 2020 report on financing for development. And one of the key themes is disruptive technologies. And it's very interesting because, when we were approached, we did struggle to think, actually, how are we going to represent Africa's perspectives in this report? It's a global report, but as we know, we are missing out. We are not at the table. And so this report is an opportunity for us to really put forward our concerns and also to push to the global community to reform certain areas which are damaging our ability to mobilize resources. So those are my opening remarks. Thank you very much.
Oh, thank you very much. Big round of applause to Zuma. And I see you already handed the microphone over to Doris Akol, so you've taken over my job. So it's all right. I think what I'd like to ask is yes, I think it's on? Great. Doris now is the Commissioner General of the Uganda Revenue Authority, and I think the perspective that she'll bring to the discussion is that she has lived experiences, real live experiences about what we are challenged about taxing rights and the rest. So maybe in her opening statement, she'll touch on a couple of them, and then we'll ask her a couple of leading questions afterwards. Doris.
Thank you very much. Very good afternoon to you all. I would like to thank the organizers of the conference for giving us an opportunity to share some insights and perhaps also provoke you into what can we do to address the issues that we are all dealing with, especially relating to the digital economy or taxation of intangibles. I bring specifically perspectives from the tax administration, and but I would like to bring some context to it. There's a lot of talk about the digital economy. There's a lot of talk about taxation of intangibles, but I do not want to assume that we are all on the same page in as relates to issues relating to the digital economy. From our perspective as taxation people, the issues that we look at are, first of all, how does the digital economy manifest? What are the issues that we deal with? And some of the issues that we deal with is economic activity that involves value creation using intangibles, particularly IP rights, use of non-cash transactions, as well as business models that are defying traditional business models that are encased in brick and mortar. And for us, those are some of the issues that we use to define the parameters of a digital economy. I would also like to say that the digital economy, the discourse about that, especially around taxation and regulation, has kind of given a bad rap to a digital economy. But I would like to set the record straight that there's a lot of value creation, there's a lot of value driving coming out of the digital economy, particularly in the context of our continent. A lot of economic growth and development is being driven by business models that have embraced a digital way of operation. And therefore, it is not, even though it presents challenges because of traditional methods of regulation, it is actually something that we need to embrace, because this is where the world is moving. What are some of the characteristics that give us the challenges that we've been talking about? There is no physical substance of transfer, and therefore one is unlikely in regulating transactions that are happening in a digital sphere to see a formal exchange of value in terms of money changing hands, paperwork, and the traditional way that we recognize transfers. A lot of the economic transactions in the digital space defy physical barriers like borders, and therefore one is not able to distinguish where exactly the value has been created. Many, many times, the transaction is not backed by the traditional form of currency exchange using traditional cash or typically what our central banks recognize as legal tender. Indeed, we now have a space of digital currency, not only the cryptos that people are talking about now, but things like points that one earns by hotel stay, air miles, and things like those. That digital currency is taking a lot of shape, and it is defining a lot how many transactions are happening in the digital space. It is difficult to identify who is the beneficiary of the value and who is the creator of the value. And particularly from a tax perspective, when we are looking at allocating taxing rights, this disconnect is one of the issues that is creating a lot of discussion, particularly at the international level. And also, there is a lot of value that is created not only from an existing transaction, but future economic benefit arising out of the economic transaction. There are future rights or future economic rights that has arisen as a result of a particular transaction, and particularly within the realm of intellectual property and how this is being exploited. Now, what are the things that we need to look at in terms of the taxation? And for the tax administrators in the room, I think this is where we need to unlearn many of the things that we learned before and relearn and perhaps define policy and law that can address the issues that we're dealing with in the digital economy. Right now, many of us are trying to use the legal provisions in existing law to tap into taxing the value, taxing the rights arising out of digital transactions. And we are trying to bend the provisions on withholding tax, imported VAT services, imported VAT on services, and provisions such as those that exist in the income tax laws and VAT laws to try and tax transactions, and therefore we are trying to frame these transactions in what the laws have already provided or traditionally provided. I think what we need to be thinking about is what are the parameters that we need to define to recognize in this new business model. And this is when you hear people talking about, forget about your typical definition of a permanent establishment. I know there will be panels that will be talking about this later. But forget about your typical definition of a permanent establishment where someone needs to have existed in your jurisdiction for 6 months or done some activities for a certain period of time for you to recognize that there's a permanent establishment. These days we are looking at how else can you have a permanent establishment even without having physical presence, even without having agents in your company or in your country, in order for you to recognize that there's a permanent establishment. For example, transactions involving transfers of royalties and license fees that are moving cross-border, and the recognition of this transfer is happening in financial statements, is happening on balance sheets, is happening in how value is being recognized in a business, goodwill and things like those. How do you distinguish where the permanent establishment has been is located? So we need to move beyond what we know and start thinking about redefining new parameters if we are to understand how to tax for our country's transactions in the digital space. Valuation, the valuation of the transaction. How are we determining the value that is being attributed to a particular economic transaction? We have experts in the room that are used to things like arm's length, are used to typical fair market value. But when you're dealing with intangibles, when you're dealing with digital currencies, when you're dealing with multinational transactions in spheres that are not even geographically located, where value is created in the US, payment is made on servers that are based in Hong Kong, goods are being delivered by drones in South Africa. Where is the value created, and what is the value for tax purpose? You're not going to attribute your typical fair market value or arm's length transaction value to transactions like those. So we will need to have real discussions. We'll need to have real policy definitions and interpretations on how we recognize value in that space. Data. Data is the new, is it gold? Is it the new gold? Is it the new oil? I don't know. Data, if you're to harness regulation of a digital economy, data is your oil, or data is your gold, because this is where everything happens. The information arising out of these transactions, the multiplicity of transactions and parties involved and jurisdictions involved, and the data that is created around this is what you will need, and not even what you typically think of as a tax administrator in arriving at a taxing position. So data, if a tax administration is to be able to harness or to tap into abilities of taxing digital transactions, you will not be able to, there's no two ways about it. You'll have to harness data, you'll need to know how to collect data, either from your own business third-party sources, because this is where the value for us as tax administrators is coming from. Looking at some of the pertinent issues that are being talked about right now, particularly services in the service, the value being created by people who have no clue at all that they are creating economic value of a particular service. And I'll give examples using perhaps Google or Facebook, which we all are familiar about. All of us who are on Facebook have not paid any fee for joining Facebook. But in joining Facebook and transacting whatever it is you do on Facebook, you're creating serious economic value for the call it ultimate economic beneficiary of Facebook, because the value is in how much information they can sell, and that is where they collect the money from. That is how they earn their bread and butter. So the disconnect between the person creating the value and the person taking advantage of the value is where we have some of the issues that are defying how do we recognize who has the right to tax. Is it where the value is being created, where the users are, and how do all these tax administrations in these jurisdictions determine how much value they can attribute to the transactions on Facebook in their jurisdiction? Or is it the ultimate destination of where the owner of Facebook is located, or the ultimate economic beneficiary of Facebook value is located? And this is the tug of war that we are beginning to see in the international tax discussion. The difficulty between distinguishing where, again, the value is being generated versus where the value is being enjoyed. We also have the prevailing theme about the multinational nature of this new normal. It's a new normal for us. We cannot run away from that. And because most of the businesses are looking at how they can transact digitally. So again, this goes back to the redefinition of how do we determine how we assert a taxing right on the value that has been created. Yeah, for tax administrations, I'm just winding up. For tax administrations, I think we will need to be proactive. We cannot simply sit in workshops like this and talk about the digital economy because it's now the new, Logan was talking about earlier, illicit financial flows, and it seemed to be a buzzword that seems to have kind of lost some air to it. But we can't talk about digital economy without being proactive about collecting information that is going to help us allocate and assert our taxing rights over the value that is being created. I thank you.
Let's give her a round of applause. Thank you very much, Doris. And I think she brings to the forefront a couple of interesting perspectives. One particularly is that, you see, a number of countries are actually right now trying to put in place tax rules and laws based on old perspectives, because digital is a new phenomenon and people don't understand it. So do we need to sit down, first of all, to come up with new rules, regulations, ordinances? I don't know. That's a discussion that we're going to have in the room. But when we talk about discussion, about rights, about perspectives, for the community or for people, I think the next speaker is the right person to bring on board. So Memory Kachwamba. Memory, I know you work with Femnet, but I'd just like to know, tell us, is there, first of all, a gender angle to this discussion? And just give us your entire presentation and just throw everything totally open.
Okay, thank you so much. I think there's a gender perspective to everything. anything that concerns the economy, there is a gender perspective, and particularly macroeconomics, because we've seen the discourse, particularly around women's rights, women's issues, being relegated to micro issues around financial inclusion, issues around small economies. So yes, there is a gender perspective. And I'll just start by saying, when we look at where the women's economy, most of it is located within the informal sector. I think we heard from UNECA that 80% of the economy of here in Africa is informal. And of that 80%, the majority are women. So when we're talking about a digital financial system, we also need to look at the perspectives and put what we call a gendered lens to it and say, how does this affect particularly the women who are part of the informal sector? So the first thing will be around issues around access. So there's a whole narrative around the digital economy availing more access to information, access to loans, access to the unbanked being now banked. But in that access, we need to look and say who is getting that access. And when we look closer and we even go to the household, we find that in most houses, the person who has an access to a mobile phone, they may both the woman and the man might have, but in terms of smartphones, we see that there are more men who have access to smartphones. And having access to a smartphone means you have access to more apps, and then you're able to engage and to have more information. So that could be one angle. Another angle is also when we look at some of the loans, the small loans that the digital economy has provided. Of it is so you find most of the women who are in the informal sector, the majority of them are dependent on very small margins of profit, and most of the profit that they have is just enough maybe for a day, and it's not enough to give them as much capital. So what fintech provides, which is an advantage and a disadvantage at the same time, is that it allows them to be able to borrow. So you can borrow maybe, maybe enough up to a certain amount. But what is missing from this whole narrative is the issue around the regulation and how much, for example, interest or facilitation fees that is actually charged. And I think this will be discussed in the other panels. And also, it also links to the taxing, because it becomes very invisible where these multinational service providers are making a lot of money out of people who really don't have the money, but they are put in a cycle. And there's a study which was done recently, which showed here in Kenya that someone can actually have 5 apps where they are using one app to borrow and another app to pay what they've borrowed. So it becomes more and more of a cycle. And I think these are some of the things that we really need to look and start unpeeling some of the layers, but also in that using a gendered analysis. Another thing is also how this, when you look at this economy, how it also starts crowding some of the services that women have ordinarily done and they've ordinarily gained. For example, when we look at some of the apps for cleaning services, allow to hire a who can come in and clean your house and leave. But what it does at the back end is that the domestic workers actually have no insurance. They are just working and they're just being given a daily rate. So they have no safety or protection in terms of their rights as workers. So these apps in a way kind of like crowd out. So they are an advantage, because if you look at some middle class people who want that service, it's an advantage. It's easy. You just call, you just up, and you get a service. But at the back end, what it's doing to the person who's actually providing the service and the work is something that is not being looked at. So I think one of the things that we really need to do is to understand how this digital economy works and what are the implications, because it's not enough to just say, yes, it has provided an advantage, but what are the other invisible aspects or the invisible effects that that it does. And I wanted to just touch a little bit also in terms of the financing for development emphasis on domestic resource mobilization, which is looking at getting more techs. And one of the things is when we also look at that narrative, there are the issues around, yes, it's good for our tax regulators to get more tax, but when you look at a case like Tanzania, for example, where they now reintroduce menstrual products tax as a way of gaining or as a way of resource mobilization domestically. Those are some of the layers that we also need to look and say, but there are multinational companies that are not being taxed fairly, who are now using the digital economy as a way of increasing their profits and really crowding out most of the domestic economy and the domestic businesses. So I think I'll just end and just say one of the things that I think we need to be in this conversation is we talk a lot about not being on the table as economic justice activists, and as women's rights activists, we also talk about not being on the table of some of these platforms. So you find in terms of the negotiations around tax issues, we don't find a lot of women, or even if we find the people who go there, they're also not using a gendered analysis or a gendered lens. So it's important to make sure that we are working across the movements, and that is important for women's rights organizations, networks, and activists to be part of this conversation and not be a footnote or be an etc. or just being delegated to a session, but to be within the mainstream and to always use some of the tools that we use in terms of making sure there's an intersectional approach in everything we discuss.
Oh, thank you very much, Memory. I think Memory brought to the discussion an interesting perspective, and I think it brings me back to a discussion that I think a number of people have had, that how do you think you can have a digital discussion yet you've got an analog mindset? And it's because a lot of individuals have not taken time to smarten themselves. No matter what your area of performance, of operation, if you're still in 19 frozen stiff, and everybody now is thinking digital, we're spur of the moment, you're not going to be able to apply the regulations, the legislation present. So I think our next speaker, first of all, has an eye on the continent and has a great understanding about tax administration. So I'd like to introduce Mr. Logan Ward. And Logan, I don't know, what's your angle on this discussion?
Thank you. You know, the one thing about getting older is you have a kind of you have turmoil. When I was young, there was a song by Bob Dylan called "The Times Are A-Changing," and there was a beautiful line. I was only 17 when I heard the song, and I loved this line that says, "Come, mothers and fathers throughout the land, and don't criticize what you cannot understand. Your sons and your daughters." The point is, they say, the world is changing, and if you can't lend a hand, get out. Yes. And I think that's the turmoil our society is facing. We are at the edge of a new era in our whole world. And so there's electric cars, and electric cars is great. Imagine how it saves the environment. Imagine what electric cars is doing. But imagine there's not going to be a need for oil products anymore. There's not going to be a need for that type of engine assembly anymore. So where are these cars going to be built? Where's the energy going to come from? How's electric cars going to work in countries where there's hardly energy to light up the street? And so what are the implications of these good innovations? And so that's disruption. And so as Commissioner General Akol said, these disruptions are really good. It is really positive. Instead of rejecting it, We must find our place inside it. And so, for me, that is where the discussion is going. And therefore, your response must be equally disruptive. You cannot just respond with the old. And so if, as the panel says, there is no physical presence of the digital company, and you waiting for rules to be made somewhere for you to tax them, why don't you say, but these companies get their money out of our country through something. They get it through a banking system. So why don't we tell the banks to withhold the tax? Even if we don't know where they are, they're getting the money. And so that is not in the script. But neither is digitalized economy and the implications thereof in the current script. And so if it's disruptive, positively, the policy and the regulations must respond disruptive and positively. The risks are that you are going to be accused of unilateral action. So let them accuse you. You've got to respond to that which affects your economy, and you've got to defend your economy. And so I think that instead of moaning about the disruption, we need to be innovative. So if the Uber driver, the Uber part of the Uber driver's company and Uber doesn't have a presence, maybe the driver must withhold the Uber share of the tax and pay it to the tax authority and sort it out with Uber. I'm saying this is not classical, but neither is the phenomenon that we are dealing with. And so you cannot be analog in a digital world. I think that's the point. I think the next point I want to make in looking at all of this is that we're looking at digital, and we're talking about digital. At the heart of all of this, to be able to respond, is no longer officers and auditors and vehicles that's going to inspect. It's now information. It's statistics, it's technology, it's algorithms, it's stuff that tax authorities at the moment may have 1 to 10% of skills and capability of. And that's where the new money is. Are we investing? Are we growing in that direction? Do we have the capability, firstly, to get information? Do we have the ability to process that information? Do we have the technology to do it? Because if we do, it all becomes very easy. Then URA systems will talk to the bank systems. And all of those systems will talk to the employer systems. And all of those systems will talk to M-Pesa. And everybody talks to everybody. I think, what is that new technology they're talking about? No, there's another word, but I forgot it now. But where all these systems are talking to each other. It's a B something. Yeah, it will come to me. Blockchain. Thank you. Shows you I'm still analog. So thank you so much, Ida. So I know you're ex-technology person, so I'm very happy. So I'm saying that technology, technological systems, your research people, your data, your analysis, that is going to become the new auditors, the new drivers, the new physical inspectors. And that is where the investment lies. And maybe just the last point. You know, I've always been concerned about what I call a herd mentality. When somebody says BEPS, we all run to BEPS. When somebody says treaties, we all say treaties. Now somebody says digital, we all, because that's the thing to cover. And there's nothing wrong with looking at that. But sometimes if you run to where the ball is, nobody's going to hold the defense or the other side of the field. And so what is still the basis of the African economy as it stands? The basis still is extractives. The basis still is production and manufacturing and agriculture. So I'm just cautioning that although that is the growth, the basis of our economies are still that, and we must not forget that. Why is it important? Because the essence of the African economy is that we only fund between 30 and 70% of our ability to spend. So we borrow. And if buying a house is anything to go by, it takes you 20 years to pay a bond. So the child that is yet to be born is born in debt every year because we borrow every year. And so, digital economy or not, we must pay those debts now. And so, I think that in addition to looking at the digital economy, we need to look at how we export diamonds and whether we're getting the value thereof. And how globalization has allowed diamonds to be sold at 65% more than they've taken it out of our country, and we still don't get the value. In the meantime, we must change those basic things as well, because those things are within our control, and we do have the mechanisms, and we do have, because those are still analog things. And those things still drive our economies. But you can put in digital abilities to improve the way you deal with the current drivers of the African economy. I'm just saying that who is selecting the field upon which we play? If the field currently is digital and we're all on that field, what happens on the other field where the economy is really happening also? Thank you.
Well, thank you very much, Logan. And I think something that I'm taking away from Logan is that, you see, you cannot have a normal response to a disruptive engagement. So we must have disruptive responses at the same time. So what I'd like to do right now is probably open up the discussion for the next 15 to 20 minutes. And then I'm going to kindly ask each of our presenters probably just to give us 2 or 3 closing statements. What has stood out for you the most in the discussion? So feel free. We're going to have gentlemen and ladies walking around. Steve, do you think we could have somebody moving around the hall with a microphone? And we'll take questions from all across. Farah and Cynthia, if we could probably have a couple of the questions which are coming up on the digital space, if they can be written down and sent through by WhatsApp, that would be great. So I think we'll take questions from there. Our first question from right there. We could just have somebody walk around with the microphone. I think we've got a lady right near the booth, right there, the back. Just kindly introduce yourself and just quickly give us your question. Let's kindly keep our questions short and to the point.
Hello, my name is Owusu. I'm from Ghana Revenue Authority. My question, I would like to address the question to Dr. Ronnie. Logan, sorry. When we're talking about digitalization and the issue with where the value is being created and where the value is being enjoyed, how is it how are we as a continent trying to put in a consolidated corporate tax base like the European Union is doing? I know there's kind of progress. What are we doing as Africans? Where, in terms of unitary taxation, how are we going to share taxes and help combat, fight the digital economy? That's my question, basically.
All right. I think let's finish the question from this side, then we'll come over that side.
Good afternoon. I'm Esther from Catholic University of Eastern Africa. I have a question to the commissioner from Uganda. Determination of to tax digital corporates in aspects where a corporate entity conducts its trade online, and payments is, say, in aspects of where payments of value, the value creation, say, is in Uganda or in Kenya, but now in terms of payments, it occurs on a platform like by use of PesaPal, for example, or by use of blockchains, for example. So how would you be able to, maybe, how would you reason it out in terms of taxation?
Okay, thank you, Esther. I think we'll take 2 more questions, answer those, and then get another round of questions. Laila, I think there's a lady right there. Her hand is up. Oh, there's a gentleman there. Okay, kindly keep there, and then we'll take Laila's question last.
My name is Musa Wawio from Tanzania. I'm representing our organization. My question goes to maybe that lady and then the director of URI, I think so.
I think there are three ladies.
That one next to you.
Oh, Melody. I think Melody, that's for you, yes. Her name is Memory. Yes.
Thank you. Now, we are talking about digitalization, in short, e-commerce. Now, there's one thing that maybe I would want to know from her or the other gentleman there. The common man, is he involved in the thing of digitalization? Is he sensitized to know how to benefit and how even to know the importance of why the governments are coming in to tax them and why they can benefit from this digitalization? Because in most cases I see these platforms where the technical people from revenue authorities, they normally have forums for themselves, but not involving the common man, CSOs, and yet these are the people who use the businesses on social media. For example, when you go in Uganda, they tax even WhatsApp, even what. No, that's why I'm asking.
I think that's definitely a question for Memory. Logan, we'll forgive you for that one. All right, the final question going to Laila.
Hi, thank you. Great presentation. My question is for all the panelists. I was wondering whether we have a united approach to taxing the intangibles. Because what I understand is that there is some sort of an apportionment formula that looks at taxing it in form of looking at where the capital has been generated, where profits are made, and for example, where the labor has been actively employed. But are we looking at the element of research and development as also a feature within the apportionment? The second question is relating to user participation. I think it's great to be able to capture user participation to enable a tax formula for each country. But how are we going to capture that user participation? Do we have the technology and the platforms that's going to help us capture this, or do we have to license from the global north, maybe the United States, the companies that they have that hold the big data? Do we have to obtain licenses from them? And if we do, then is it not tantamount to actually paying out more resources for licensing to those countries under IP law rather than holding that money within the continent?
Okay. So I'd like to probably hand over the microphone to Uzuma. Uzuma, probably let's start with the first question. Do we have a united position? Because I remember you're telling us that this is new territory and we are not sure how to approach this, but maybe you could give us guidance on where we should go to find the solutions.
Thank you. I think this is something that we're definitely working on, and I think this conference is testament to the desire to develop a common position which can tackle some of these issues in a united way. Also, some of them like to stand. We're going to continue with business. Is that the regional approach where you find power in numbers, and so for example in the region you may have Nigeria, South Africa, you have some of the North African countries which really have maybe a more developed, a more sophisticated approach to tax administration and also dealing with the digital economy. It's good to sort of capitalize on your neighbor's power and actually find a way to sort of ride on their coattails in order to address some of these issues. We know that the African Union has recently launched a digital transformation agenda, which again I think will sort of nicely encompass some of these issues that we're dealing with and also give us a little bit of authority at the highest level in the region to tackle some of these issues. So I definitely think this is something that's on the table. I think that it's gaining increasing momentum, and I think I for one am very proud of the sort of expertise that has gathered here today to try and get to the root of how we can better capitalize on some of these developments. Thank you.
Okay, thank you very much. Commissioner, I think the question from Esther was an interesting scenario. Based in Uganda, and then the payment system is something like PesaPal or PayPal. How do you reconcile the two?
That's the crux. That's the crux of the challenge that we deal with. But I know that many jurisdictions have tried to go around that and said that we're not going to look at how much profit you made or where the money actually went. We're just going to look at the turnover of the value that is created using those platforms in our jurisdiction and impose a tax on that. So some forms of digital service tax around turnover are, starting to show up. We're seeing a lot of withholding taxes being used. And whoever is making a payment needs to send a portion of that payment to the government and sort themselves out with the person that they're paying. So those are formats of digital services tax that are beginning to show up. We also see in other places like Uganda where taxes on access or taxes being paid in order to access the platforms are being deployed. And this is a way to kind of get around this conundrum of value being created but payment being done elsewhere. So we'll see how these develop. They'll continue to develop with more understanding of how the transactions, the architecture of the transactions and the technology being developed. We'll see how these continue to unfold. And you know that also in the so-called more developed economies, we've seen some countries coming out with what they call, like France, for example, coming out with the GAFA tax, which is basically a euphemism for tax on Google, Apple, Facebook, and Amazon. And, these kinds of taxes being developed by different jurisdictions. And I think that also goes to explain or to answer Laila that perhaps we don't yet have a united approach, and maybe that is where the danger lies, that if jurisdictions go their own way in defining rules of how to tax these transactions, then it's going to become a whole complex maze of how people comply. Even those creators of the digital platforms will have to define different ways of compliance, and it can become very complex. I would like to speak to the issue that our colleague Musa from Tanzania raised, is the common man involved. The common man is very, very much involved because one of the benefits of the digital economy is the financial inclusion. Just by people sending money on M-Pesa and whatever other platforms you have in your countries, that is participation in the digital economy. And the common man is very, very much involved. Even from Memory's perspective, the women are extremely beneficiaries of this financial inclusion because it has broken the barriers to financial access to finance that traditional financial systems had put in place. So people transacting using mobile money, being able to post their products on WhatsApp platforms and getting credit and being paid using mobile money transactions, that is full participation in the digital economy. I think what you're asking is what voice does the common man, so to speak, have in the development of regulation? And platforms like this, I know the discourse on digital economy is very, very vibrant in the taxation area, but is particularly not so vibrant in other forms of regulation. And I think we need to have many more from the government perspective. We need to have conversations like this happening for purposes of regulating the technology, regulating communication, regulating financial services, just as much as we're having this discourse in taxation.
Wow, very well put. Thank you very much, Doris. But an interesting thing, I think somebody once said that if you're having a discussion and you're not at the table, then you're on the menu. So a question that we're going to put to you, Memory, is Musa's point. I think the Commissioner General addressed it and said, yes, there is financial inclusion as an aspect, but what more? What benefit can I accrue Because I'm sure he's looking from a perspective of how will I be able to benefit. Then another thing is, how can I participate? So I think if you can look at both of those angles.
I think from what Musa was also, just to add to what the General Commissioner said, is I think information is there, but I think our governments have a moral obligation or duty of care to actually put the regulations. We've seen how with the increase of borrowing using some of these fintech apps, there have been social issues, suicides, an increase in violence. So also trying to connect how the whole digitization has an impact, particularly within the society. And I think the government have an obligation for putting regulation that can protect the citizens. But I also feel that Africa is developing a lot of the technologies. Here in Kenya, we have, what do you call it, Savannah Valley? Cameroon, Sierra Leone, Nigeria. I think there's a whole sort of like, if you want to call it a sector of people who are coming up, the techies. But I think we need to start bridging. How do we as civil society also start working with the techies? Because there's no way I'm going to understand programming using Python or all those languages and understand that if the cryptocurrency, this is how it moves. I'm doing human rights, women's rights issues. So if we also start connecting the dots and working with the different, actually enticing them to let us to start unpacking so that we really know what goes on in that world and how we can even, use and maximize on that and start creating our own economies. I'm from Zimbabwe, and we've had a cashless economy for so long. So it's possible here in Africa to also have platforms, using these same platforms where you actually don't have the actual physical cash. Why can't we be disruptive? Do it for a group of women, have their own economy. As Africans, we've always done barter trading, and it has always worked. Create our own currencies, which are located on the continent, our own servers, our own data that we own. But I think this also needs a lot of political will in terms of the regulators.
Oh, thank you very much, Maria. I think the last question goes to you, Logan, and I think there are one or two you could respond on. And first of all is what is ATAF and what are the African countries doing together to put together a consolidated plan for these digital companies and the challenges that come along with taxing them?
Thank you. ITAB has developed the technical notes that forms the basis of the African participation at the OECD discussions on the digital economy, and therefore particularly look at the allocation of taxing rights between the importing and the exporting countries, and also respond to some of the more unilateral type of proposals made by countries like France and Germany and the United Kingdom. And so our response has been to develop thoughts about where value is created, especially from what they call the market economies, and to understand how social media and others are creating through algorithms and others huge amounts of value for companies that are not based here, but the values are created here. And part of what we are looking at is how do you put a value to this, and then therefore how can you then collect from this? Because at the end, that is the outflow. That is one of the outflows. So that is what ATAF is currently doing with regard to the digital economy. But we have built in other protection in a response, because it's not only social media companies, it's also the broader multinational enterprise behavior. And so we've developed guidelines for African countries how to deal with excessive interest deductibility, interest that is deducted before profit. We've developed guidelines on transfer pricing regulations, and transfer pricing is the biggest form of tax losses. So those are some of the things that we have been doing. I think the important thing with regard to the first question, in addition to Azuma's response about the Africa consolidated response, with regard to the corporate tax base, we have to respond, because companies in Africa on average, only contribute 15% of total tax collected. Global average is 30, 34, 37%. And so where's the other money? And we need to find those companies that are not contributing to the fiscus. The second point about all of this is part of that losses is due to the fact that we are not examining our treaties, and we must do that. The issue of the strength in numbers, I agree with. But Africa must form a platform, and ITAF is an organization of tax authorities. We need an intergovernmental and inter-country platform at the level of the AU where tax can be discussed. Because, for example, the EU has created a position on everything for their members. I think the AU must do the same. And in that way, we won't fight with each other, we won't have a race to the bottom. Tax is a sovereign issue, but you can harmonize what you do, and you can develop positions that can defend your domestic economies if you have these discussions, this research, this technology, this information available at a continental level. And therefore, I think, in addition to strengthening numbers at the global participation, we need at an African level, an AU level platform where intergovernmental tax matters get discussed.
Great. Thank you very much, Lo. I'm going to quickly take 3 or 4 more questions, then I'm going to have closing statements from each of the panelists, and then we'll take a break for lunch. Just kindly give us your name, quick question.
Yeah, my name is Chanda Stephen. I work for Kenya Revenue Authority and currently the chair to the VAT, Technical Committee on VAT and ATAF. I've got a comment and a question. My comment is, in our course of business, we have established that the level of automation of the tax administrations in Africa is very low. We've gone further to establish the infrastructure, ICT infrastructure in African countries is also poor, if not low. And therefore, as we engage and talk about digital economy, we need to ensure we develop the infrastructure, because if this is not in place, it will be difficult even to engage in the digital economy. Maybe question now to the panelists. Today, we are going to come up with a very good document and solutions. We need to find a framework through which all of us as Africans or African countries, not only tax administration, to get this information and find a way of implementing the same. So if that framework maybe can be developed to ensure we reach everybody else, not just for information, but ensure we implement. Thank you.
All right, thank you. I think let's take that question there, and then those two.
Okay, good afternoon, everyone. I'm Celestine, representing Action Aid. Yeah, my question is similar to the guy that just spoke. Yeah, harnessing the potentials of the digital economy requires also that the countries also go digital in terms of their tax administration. But looking at us in Africa, some countries are already taking huge steps, others are still behind. Yeah, Logan, ATAF, what is the role that ATAF is playing with regards to this? Are you encouraging countries, to digitalize their system? It requires political will, but there's huge potentials in digitalizing the tax system. You see some countries, revenue has increased, due to the digitalization, automation of the system. So, but the ATAF really need to play much stronger role than it's doing. Thank you.
All right.
Thank you so much to the panel. This is a really exciting conversation to be part of. My name is Deborah James, and I'm coming from the United States and working with a network called Our World Is Not for Sale. That is the global network of civil society groups, including many African groups that work on the WTO. And my question to the panel is that you may be aware that there was recently launched in the WTO new negotiations on a plurilateral, meaning some countries, not all countries, on digital trade. And there are within those negotiations 7 different provisions that would affect tax collection, both trying to make sure that no digital products are ever taxed, ever, and also that would affect corporate tax collection by revenue authorities. And there are 4 African countries that are participating in those negotiations, but the vast majority of the Africa members of the WTO, of which there are 43, have vehemently opposed these negotiations. And I wonder if the panel was just aware of it, and if they have a position on, whether or not you should be constrained by a trade agreement from taxing digital products, and also to be constrained in your corporate tax authority through a trade agreement. Thank you.
Well, thank you very much. I think I'd like to take the last question from there.
Thank you. Good afternoon, everyone. My name is Crystal Simeone. I work for Femnet. I think my question is related to the last one, and I'm curious about resistance. I'm curious about what resistance from the African continent would look like if we all came together. Thomas Sankara started the buddings of a debt resistance and said, if we try and pay back Africa's debt, for sure, people will die. Our people will die from hunger, from lack of healthcare. But if we refuse to pay back this debt, nobody dies. And so I'm wondering what a tax resistance would look like. If a multinational is coming for copper in Zambia, and we just say no unless they abide to our tax regimes, and what does it look like for us to collaborate more on that? And I'm wondering if there's any movement around resistance, because the tax conversation, the macroeconomic conversation is a political one, and one of a power imbalance of a global structure and system that is so deeply flawed. And the digitization of our economy is only an exacerbation of those flaws. And so if at the very base, at the very structure, we're not able to say no, I'm wondering about how we will be able to, challenge the digitization of the root cause of our problems.
Oh, thank you very much. So I think each of the panelists probably could weigh in, and I'd probably start with Uzuma. Let me hand you over the microphone.
Thank you. Those are very interesting questions. I just want to raise a few issues. I think there was a gentleman who was talking about ICT infrastructure, and I think we shouldn't lose sight of the ultimate goal of these discussions, which is economic growth and ensuring that we can support the prosperity of African countries. And part of that means enabling cottage industries to emerge out of Africa that can also provide economic growth within their own domestic borders, create jobs, create value, innovate in a way which is appropriate to the local economy. I mean, we've talked about mobile payments, for example, but there are also some other platforms which deal with much higher value transactions. So, for example, Flutterwave, which was an electronic platform launched from Nigeria, trying to sort of link up the banking system across the region so that payments could be made more easily and at a cheaper cost. They transacted about $1 billion worth of dollars in 1 year. So I think that it's important to just keep our eye on what the ultimate gain is. And I think absolutely we cannot move forward if the ICT infrastructure in African countries are incapable of managing the type of innovation that we would like to see. There's some African countries where they have servers lying idle in the corridors, but we're talking about digitalizing tax administrations, but they're still working on, handwritten memos. So I think there's a lot to be done to ensure that, yes, we strengthen the ICT infrastructure, and we also push the mindset of technology and digitalization within the government. I just wanted to touch quickly on resistance. I think that this is something that is happening underground. It may not necessarily be as vocal and as prominent as we've seen in some areas, but we are seeing, I think this forum, for example, is an act of resistance. It's saying, hold on a second, we're not going to walk into the room not being fully aware of some of the issues that we're signing up to. And so I don't think that resistance only plays out in terms of, placards and an extreme version of refusing to pay back debt or to sort of push against some traditional tax structures. I think it's also in coming together and saying, okay, we need our own platform to be able to unpick what is happening at the global level and take our time rather than being bombarded by viewpoints from, experts across the world who have already had time to analyze and put forward their policies and their regulations that will benefit their countries. So I think resistance can happen in different ways, and I think there's room for all different types of resistance to evolve on the continent. Thank you.
All right, great. Thank you very much, Uzuma. And I think Commissioner General, I think Uganda is probably about to celebrate almost a decade of experience with a digitized tax collection platform. And I think with that, you've got an immense amount of experience coming from a have perspective. How do you think you can probably benefit a number of the other developing countries, or maybe benchmark on countries that even have had an automated system for longer than Uganda's?
Thank you. Certainly, there is a lot of value of automating, but perhaps the largest or the biggest value comes out of the efficiencies that come out of automating. But the caution that I would perhaps give coming out of this journey is that we shouldn't automate just for the sake. Don't automate whatever processes you have. We need to first understand how your processes need to be efficient, less bureaucratic, delivering a service responsive to client needs, and then automate those ones. And I think for us, that is where we found significant value. And once we automate your, call it the primary systems, then there are also the support systems that are going to have to be automated, because the value is in integrating all these systems to speak to each other. Coming out of a decade of automation, Uganda Revenue Authority is over 90% automated. The challenge then becomes, how do you not automate within yourselves, but how do you integrate? How do you interface with other systems that then create the value chain benefit of automation across the entire, call it government? It's useless for URA to be automated if the central bank cannot interface with the URA system, or the government payment system or the government payroll cannot interface with URA. So in this journey towards automation for tax administrations, I think first of all, the lesson has to be, do a business process reengineering, make your system, your processes efficient, less bureaucratic, and aimed at delivering a service, a quick service, but also look at how to interface with other government systems. And that's where the benefit in automation lies. I wanted to speak also to the issue about the WTO negotiations that are happening. We haven't yet gotten involved, I think. I may be wrong, but I think we haven't gotten involved at a national level. But this is where I think we speak to what is the African voice in these kinds of negotiations. And I think there's a role for, first of all, the AU to take interest, and avid interest, and also effective participation in these negotiations to create certainly an African stand on these negotiations. But also it gives us space for ETAF to get involved and perhaps assert certain rights for Africans. In light of the question about resistance, resistance can only be effective if we are all moving in the same direction. Right now we have competition among ourselves, even as Africans. We have competition for the so-called race to the bottom, and we are trying to outdo each other. If you can't get this fiscal package, come to my country and I'll give it to you. How in that space are we going to have a resistance? When one country asserts a taxing right in a particular field, you find another country castigating that very country and saying, you guys are wasting time and you're losing benefits that you can get right now. Why don't you give up on your taxing rights so that you can, that kind of language. I mean, if we have this kind of disparity in the way we approach our taxing rights as sovereign nations in Africa, how are we going to have effective resistance? So we need, first of all, to be on the same page. We need to have the same voice. We need to have the same mental positioning in relation to this in order for us to have an effective stand against these developments.
Well, thank you very much, Commissioner General. Memory?
So I think just in closing, I can just say we need to really work together and start understanding that this is about a global economic architecture which doesn't really work for Africa. And if we can take it like that and say we need to fight together and we need to get as many movements involved, because what we are also fighting are powers which will lobby, for example, at the WTO. They will lobby for the people who are lobbying for such provisions are interested. These are large corporates who have money. So I think it's a realization that what we are fighting is much bigger. We are fighting corporates who have money, who have power, who have access to some of these global markets and some of these global spaces. And we can only do it if we fight together and if we really work together also with the African Union in terms of pushing the agenda.
Oh, thank you very much. Logan, just in response to the questions, and then I'll kindly ask all the other panelists to prepare one or two salient points which you think have stood out for you during this discussion. Thank you.
Thank you very much. I think the panel have answered most of them. On the WTO, though, I just wanted to say that from where I sit, it makes absolutely no sense not to tax a digital company. It doesn't make any sense. If you add that, not to tax digital trade, together with the global move for tariffs to be eradicated and reduced, including the African free trade, those are good moves. But if customs income represents currently 35% of total African income, where's the money going to come from? And so it's not just an easy thing such as don't tax digital transactions. But one thing I've noticed or learned in this period in dealing with, African countries or developing countries in discussions with developed countries, there's a very fundamental difference in the way we approach things. In the developed world, I think, when people talk about tariffs and taxes, they speak from a position where the state has a minimal role in the functioning of the economy. They've got this marketing and the business. And so when we talk about tax, their first priority will be to protect the businesses, because that's the nature of how their system works. In our societies, the state is the central thing, is the provider, it is the most dominant actor in the economy. And so when we talk from a perspective where the state must increase its share of what the economy delivers. And so our position vis-a-vis business and the state is different ideologically, fundamentally to a developed country. And so often in those negotiations, if we are not aware of it, we can fall into a trap by agreeing not to tax digital transactions. And I think that's an important thing to understand. On resistance, I think it's important that we have resistance. But if you come from a family where the breadwinner was borrowing from a money lender for years, and the money lender charges 50%, are you going to deal with the money lender, or are you going to deal with the lender who's also having a behavior that's causing him or her to go to the money lender? And so part of that resistance, therefore, must be a resistance to our own behavior with regards to our economy, our debt, our economic policy, and our spending choices that we make. Because a capitalist system is a how can I say this in English? It's a brutal system. And so you can resist, but if you default, you're not going to get credit. And if you default and you can't fund your budget, where are you going to get money from? And so it will be important to resist, but we must resist from all angles. We must also resist the root causes that is causing that debt to create, in addition to resisting or influencing how we deal with this ongoing debt over the medium term. I think those are important discussions to have. And maybe just finally to say that on the digitization, CGR Call has given a far better answer. ATAV has been asked by the members now to try and develop a tax administration system for the continent that we can own, that we can roll out to countries throughout the continent, that the continent will own and pay fees and license and all sorts of things to itself. And so that whilst it's rolling out the benefit of automation and digitalization, it can also benefit from the business outcome of it to fund further development. Thank you.
All right, thank you very much, Logan. Let's give a round of applause to all of our panelists. So in closing, I'm just going to ask in less than a minute and a half, give us 2 succinct perspectives that you've picked from this discussion. Can come from any perspective.
Thank you. I don't think I need a minute and a half. I think that some of the messages coming out were very clear. I think for me what was very obvious is that there is a need for a common position on this issue. And I think in my mind already I'm thinking, well, what role will these regional organizations, including UNECA, play in trying to shape this common position and ensure that, it actually does what it's intended and at the same time doesn't produce any unintended results, because sometimes that is something that we see too often. And so I think that there's definitely a need for these conversations to continue, but as someone said at the beginning, that we need to really think about tangible outputs that can come out from this conference and real action points and recommendations that we can take to member states for them to consider. I think that there needs to be further analysis done, and we need to actually identify experts that can really contribute to developing this common position. Because I think everyone has expertise in different areas, and it would be good to sort of get a platform like this to actually capture some of the thinking analysis that has gone on in this space. Another thing I wanted to just touch on, which I found was largely absent from this conversation, was how the digital space exacerbates illicit financial flows. Now, I think if we had more time, we could go into that a little bit further, but I think that from the work that we've done, we're already starting to see and also receive feedback from member states of how the digital economy and digitalization is actually aiding illicit financial flows out of the region. And this is something that we really need to think about, at the same time not wanting to exacerbate any inequalities that already exist in terms of people that can use the digital space, that make use of some of these payment platforms that exist on mobile phones, and also, for example, there's some platforms where you can sign up for a bank account in 15 minutes without any identification at all. Now, immediately you can see how that poses a risk when it comes to trying to curtail money laundering in African countries. And so there's a lot of areas where we may need to, I think, delve a little bit deeper in terms of illicit financial flows and ensure that in regulating the space whilst trying to enable the growth of the space as well, that we don't shoot ourselves in the foot and provide a conduit for greater illicit financial flows going forward. Thank you.
Thank you very much, Uzuma. Commissioner General.
As a last word for me, I'd like to say that the digital economy is here. It's here to stay. It's not going away. And there's no point in being the ostrich, the proverbial ostrich. I think what we need to do is to understand it, embrace it, harness the benefits that it gives to our economies, but also understand it in a way that plugs the loopholes, the financial outflows, the illicit financial outflows, understand how we can regulate it, and understand how we can bring value to the entire value chain, not only for governments, but also for our people.
Thank you very much, Commissioner General Doris Akol. Memory.
I think for me, two things. The first is the intergovernmental platform. I think it really stood out that we really need to have more platforms where we really discuss and talk about tax issues. So for me, that's one thing that I think we should push forward. And I think also on that, secondly, is we cannot track what we don't understand. So in terms of anything to do with the digital economy, we need to invest in terms of knowing what it is, how it manifests, and also using the different layers in terms of understanding it, and of course, using a gendered lens on it. But also, I think just to end is, we also need to start looking at this whole economy in an extractive, how they literally say mining data and storing it somewhere which is not located on the African continent. So I think changing our mindsets to really see how we are algorithm, we are feeding into something much bigger, which is an economy where someone is getting money and profiteering from you.
Thank you very much, Memory. Logan, closing words?
Thank you. I think my closing words would just be brave enough to be disruptive. Participate in the disruption. And if we do that, then we'll be able to meet it. And my second point is we must set our own agenda. Digitalization is here to stay, as Doris has said, but it's not the only ball on the field. And so let's run and try and handle all the balls onto the field, because our economy is a total economy, and we have a responsibility to build on that. So we need to be brave and be disruptive. Thank you.
Thank you very much to all our panelists. A round of applause to them, ladies and gentlemen. Uzuma Erume, Commissioner General Doris Akol, Memory Kachwamba, and Mr. Logan Wart. Let's give them a round of applause. Well, thank you very much. We'd like to invite you all to have lunch. We'll have lunch for an hour. You can pick up your meal, your lunch cards from right outside at the registration desk. And we'll be back here in the afternoon in 1 hour's time. So all the best and bon appetit.